everybody should be watching is one we've talked about quite extensively here. It's the yield curve. But it's not just the yield curve inversion that's the problem. So what am I talking about? Well, the yield curve is the price for money over the curve from 2 years to 5 years to 10 years to 30 years, etc. And typically the way it works is that when you borrow for a shorter term, it's cheaper, and the longer you want to borrow for, the more expensive it gets, which makes sense. You want to get paid more money for taking more risk over a long term. The problem is when this inverts, when it's more expensive short term and it's cheaper long term, which doesn't make any sense at all. And so what we can see is that's exactly what's been happening. We've talked about this extensively, but that's not the problem. The problem is when it inverts like this, which has already happened, it tells us that a recession is coming, all right? We can see that it is inverted right here. Here's some of the charts. So we have the 2-year, which is one of the best ones to look at, the 2 and the 10. So the 2-year, it's 3.86 is the price of money for 2 years, but it's only 3.35 for 10. It's only 3.5